your higher time frame bias. This is a topic that everyone thinks that they understand, but when it comes down to it on a live market, they don't understand a thing. Most traders lose or stay in the same situation that they've been in years ago solely because they can't understand how to read structure. But in this video, I will show you the exact process that I use, which is extremely simple and repeatable, and you'll see it on the charts every single day. But before we get into this video, my name is Derek Bathgate. I've only recently started doing my YouTube channel, my TikTok, Instagram, but the sole purpose that I'm doing all of these, sharing all these videos, is for me to document where I'm going to be in the next few years, and I want to show the progress of my funded account scaling and hopefully just share some knowledge that I've learned over time that really helped me, and hopefully it will improve your trading as well. So before we get into the market side of the video, I solely trade the H4 time frame, the M15 and the M5. The H4 is for my higher time frame bias, where I mark out my internal and external range liquidity. The M15 is for my minor structure, so my change of character, my break of structure, liquidity sweep, and sometimes I enter on the M15 as well. For the M5 time frame, that is solely for entry models. So say for example, we are in an uptrend. Price is continuously putting in higher structure and breaking structure. But before this occurs, what we need to see is a liquidity sweep. This is the area that gives the market momentum to where we sweep liquidity and push higher. This low is what started the full push. But once we pass our break of structure, that is our swing structure break, everything after that is considered as external range liquidity. External range liquidity is where you don't know where price is going to take, what liquidity we're going to continue and target. External range liquidity is anything external to your current leg. This is where you don't know exactly where price is going to go, if it's going to continue higher or if it's going to give you a change of character and turn bearish. So after an external range liquidity sweep, we do not continue playing higher trades for that sole reason. But what we do is take a 50% fib to the height of the expansion, take it all the way down to the liquidity sweep that caused this break of structure. We then wait for price to change character, pull back down, take some form of internal range liquidity, create a trough, and then go higher. But what price sometimes does is it doesn't take any sort of internal range liquidity within its leg, it takes liquidity within its current leg, so the current leg that is already developing. If we see an internal sweep of liquidity, once we reach the 50% level, great, that's still a liquidity sweep. What we can also see is price have its current leg, its current pullback leg, sweep liquidity. And it's the exact same theory. All we need to do is wait for an internal sweep that takes us higher. That is our momentum to go higher. Then price comes back up and takes structure. So here we will jump on to a live chart example. We have a bullish break of structure, another bullish break of structure. So we are currently bullish. What we've had here is a liquidity sweep. This is the low that started this big expansion that took the swing high. So we have this liquidity sweep, we mark the low to the high of the expansion, wait for a pullback. Here we have had our pullback into internal range, but as there is no liquidity within this current leg, we do have liquidity here however, so price could continue lower and take this liquidity before going higher. Price just ends up sweeping its internal current leg's liquidity. So here is your liquidity sweep. We would have had our change of character, liquidity sweep, change of character. It's the same theory falling onto our M15 leg as well. We have that break of structure, move back onto our H4. Our liquidity target will be the next external swing high, as we are following expectational order flow that price is going to continue moving bullish. On the M15, we will wait for our pullback. So limit order here, we limit order the break of structure, wait for price to return, target set 2R, tapped in, and price expands higher to take out the next external range liquidity. We go back to the H4, break of structure, we have our liquidity sweep. And another thing, if we do not have a liquidity sweep within IRL, because if we didn't have any liquidity sweep, this would be active liquidity where price would just come back down and take. All the buyers would get stopped out. This is where sellers would become in control. So here we have internal range liquidity that is built up that price is able to take after the break of structure. We take the low of the sweep to the high of the expansion. Price continues higher, so we drag that to the further high. More internal range for price to take. We would then wait for our M15 chalk, which we have. This is our current leg, so we need to wait for this low to go, which I know that's a drag, but so that would turn us from bullish to bearish. We are now bearish. Let me just clean this chart up. We have now swept internal range liquidity multiple times, swept external. We are currently within the internal leg of structure. So what we would like to see now is an M15 chalk, which we have further sweep of liquidities. But on this occasion, price sweeps buy side liquidity within the current H4 leg and breaks structure. So when this happens, this creates a new leg that we focus on. The last previous leg that we're currently still playing within is invalid. We do not pay any attention to that. That will just be liquidity for us to target. So once we swept liquidity and broke structure, so this creates a new leg that we play from. We have our new sweep high, expansion low, wait for a 50% retracement. We've already had our change of character. So what we would need to see is this low to go to get involved. London session opens. We have a break of structure and another break of structure. This gives us our change of character. This would allow us to get into a short position once we have a pullback to the limit order and we target a set 2R. And we also target the next again swing low as price is now bearish. So we can expect continuation bearish price action. Expansion lower, pullback, 2R. It's as easy as that and it's so repeatable. So all you need to do here is play internal range liquidity to external, wait for a change of character, then external to internal. Once we're internal, sweep of liquidity, change of character, play external. The reason that a lot of the H4 legs fail is because we do not have a change of character. So what you need to wait for is a structure shift to then take us to the opposite side. It's as easy as that and it's so repeatable within the markets. But anyway, I hope you enjoyed this video and I will catch you in the next one.